Hello, hello. Welcome to today's webinar, and thank you very much for joining. It's 2 p.m. here in Central Europe, so we are going to start. Thank you very much for accepting the invitation. Today, I'll be joined normally with Jean-Charles, and I will speak for the second part of today's webinar. And the subject today is the global oil and gas outlook for 2023. So, of course, as always, you see, Jean-Charles, if you go to the next slide, that we have quite next event already planned. I put in a conversation of this meeting already the link to download your invitation. The idea is to make the parallel of today's webinar and not to discuss about oil and gas this time and petrochem, but to go about energy transition because it's quite dynamic as well. Many things are happening also on this world. So the meeting will be on March the 8th on a Wednesday, same timing. Anyway, you can download the invitation already here in the conversation. If you're interested by the replay of this webinar, as always, you can find it on our YouTube channel or on our LinkedIn. We will be published the following week. And if you're interested by the slide of today's session, do not hesitate to shoot me an email at guillaumejean@tobefirstconsulting.com. Now going to the agenda, today the program is quite basic but quite interesting. Honestly, we have really good inputs to share with you. Just a sum up about Project Smart Explorer. Now, starting by a recap of what happened last year, what were really the more shocking moment and challenging moment of the year, and let's say the impact on the future market. Then a project outlook for 2023 with real figures. And then we'll go into the market shift and total number of projects and investment, because it's also quite interesting, as you will see with Jean-Charles. And before stopping and going to a conclusion, we'll focus on key application that we selected for you that we think will be really the must-have and the more dynamic next year. As always, for those who are used to those presentations, you can ask already your and all along the presentation your question in the conversation of this meeting. Jean-Charles and I will address them at the end of the conference. So just a word for those who do not know us already. We are To Be First Consulting. We are the designer, users, and let's say providers of data of Project Smart Explorer, the database. We are a family business. Even if we try to recruit now outside of the family because we are a little bit short-staffed, but anyway, it's good problematic internally. Jean-Charles made all of his career, or most of his career, in ABB. He was vice president of the company in charge of all the oil and gas business. And I was myself into starting with Siemens oil and gas as well. I was not VP of the company, but still I made it through To Be First Consulting. And today we run Project Smart Explorer, as you may know it. We have about 250 clients. Last year was a big growth for us, and last year was also a record in terms of renewal because people have been confident and really trustful about our service. So thank you very much for your trust and confidence in renewing the service and working with us. It has been a changing year, 2022, and better time, let's say, come ahead, and a lot of business, of course, and we're going to see that together. In terms of Project Smart Explorer, as you know, we are still mapping all the energy business. So it's a 1,500 project, design phase, the entire pre-feed. We archive the project at 6 months after the EPC has been awarded, and we cover all the oil and gas petrochem project, which is going to be today matter. But we started no 3 years ago to map also all the energy transition, and that will be next webinar topic. But it's way more, let's say not way more dynamic, but where things are moving way faster in deposit, biofuel, carbon capture, energy storage, hydrogen, all those applications I'm sure you have heard of. So we can also help you to jump and enter those markets as well. Now going to the recap of 2022, there would be many things to say. We have made webinars all along the year about what was happening, but a few things happened and we try to sum them up here. The first thing and more maybe bigger shift was a cultural shift into the energy business, where everybody, when talking about energy transition, was talking about renewable energy. And in 2022, during the year, we passed from renewable energy in terms of wording to envision into sustainable energy. And I try to put you two faces there. The one from Siemens Gamesa conference, which was yesterday or at the beginning of the week. Because Siemens Gamesa, I have nothing against Siemens. I'm a former Siemens guy. So sorry if there is Siemens people on this meeting, but just to reflect really the renewable market, it's really challenged today. Siemens Gamesa lost 1 billion in 2022, but Vestas, GE did exactly the same, and they are starting to be afraid about Q1 2023. It's a little bit the end of a bubble, which started with massive public financing after COVID. And now it's going back to a reality where, with the inflation, many projects are having trouble into their financing structure, and fighting many communities also for the implementation. So it's really changing the renewable, and it might not go as fast as we were predicting in 2022, even if those markets of renewable are growing, are still quite interesting and honestly good. Also future perspective in the future, solar or windmill. No, really, the market shifting into sustainable. I think the major event was the Russian and Ukraine war, of course, of last year, because the world started to realize that we were even not able to delete one supplier of oil and gas and delete Russia out of the oil and gas market and the energy market. So, of course, when people had the ambition to cut all the oil and gas from our world, it was impossible. So now, if we go to the long-term vision of oil and gas, we see that the gas is, you see, you have the projection on the left are accelerating and going really fast, even despite COVID. The main argument behind that gas is cleaner than oil and cleaner than coal. So of course, if you transfer all the energy application from coal and oil to gas, already you really decrease your carbon footprint. So gas is part of any energy transition scenario. So it's going to remain a huge source of energy for the world, for petrochem, but also for electricity. And you see that by the end of this decade, it should be 20% higher, and is going more or less to increase by 80% on the the following 2 decades. So gas investment are going to carry on, of course, to sustain this production and this demand in gas. For the oil, it's a little bit the same story. It's not the same pace. You see, I mean, from this graph from just this month from EIA, that the oil consumption is back to 102 million barrels per day, which was the figure we were giving already, but was not confirmed by many data sources. But here you have the information. And what is also quite important is to see, you see in the forecast that the curve is also steadily growing at a small pace, but still growing, which means that the peak oil is not just there yet. And to give you an evaluation, in 2025, it means that we'll be around 105 million barrels per day, which will be a huge record, of course, and a huge volume of oil that need to be produced. So that gives you a little bit the idea of the investment that needs to follow to produce this oil and this gas. Now, going into also the aspect of 2022, there has been a huge shift into the energy route and really the midstream. If we talk, for example, about the Russian exportation, we put you a French graph. So sorry, it's in French, but I think you will get it. It's the volume of exportation from oil, coal, and gas seen from the Russian perspective. And you see that at the beginning of the war, which is a dot line, the dot vertical line, you see that the EU stopped really, or slowed down quite sharply their exportation or their importation from Russia. And at the opposite, you see China, which had a steady increase, following more or less the price of oil and gas, because when they increased, in fact, it was more or less the same volume, but just the price increased. At the opposite, you see in yellow India, which have been replacing part of EU importation. And then you have Turkey, which has followed more or less the same path, and US, which have stopped totally their route. So it means that in terms of exchange, all the gas which was supposed or go to EU or US has stopped to go there and is replaced for some part by India. So it means a lot of infrastructure to ship gas and oil to another location. It's doable, but not maybe at the same volume, and it has some limitation. Now let's see what happened in the future. In the same perspective, if we take not this time the point of view of Russia, but the point of view of Europe, you have here month per month the sources of LNG import by EU suppliers. And what you start to see on the right of the graph from 2022 is the huge part of this light blue increasing, which is the LNG from US. And the LNG from US has just taken off and replaced, I would say, for a major part, the Russian gas supply to Europe, and has been monumental in, acceleration to replace Russia. So it was quite interesting to see. You have also some orange dot, which are the energy coming from Norway. So on top of all the gas coming from Norway, we start to have also energy coming from Norway. So it really shows how the energy is now replacing the Russian gas for the European point of view. It has many impacts. And of course, the main impact from all this Russian-Ukrainian situation is on the LNG market and the gas market in general. Europe is going to source about 115 million tons of LNG per year. So as we saw mainly from US, but when you have in mind that this global market for LNG is just 400 million tons per year, you can imagine the impact and the boom on this energy market. And that's why you have a huge inflation on the price of gas, then the price of electricity and everything. Good and bad thing, but this gas is only produced by 5-6 countries, maybe able to re-export many volumes. So it has it put a lot of pressure on the production, but also a lot of pressure on the infrastructure to transport and charge and uncharge this LNG. But seen from the European point of view, okay, we are going to pay a higher price, but we are going to be sourced in gas. So that's a good point. The bad point is that it creates an inflation. It's let's say a price war. We are starting with other countries, and many countries in Asia which were dependent on this LNG gas are going to get dried by Europe. So of course it's let's say a 3-4 years maybe period before LNG projects are back into volumes of production able to compensate all this market. So it's big impact also. The last impact from the market is the next slide, and that's about what is going to happen to replace Russia, because as you have understood, Russia is not going to happen so much in terms of project. It will be quite complex to go from our point of view. So the thing that what was supposed to happen in Russia will happen for sure somewhere else. And here, some regions are benefiting more than others to replace Russia. The East Mediterranean Sea is, of course, I think the first player to take advantage of this situation, because it's closer to Europe. There is some heavy political link between Europe and those countries, and a clear influence on those countries as well. The biggest example was the Israel and Lebanon dispute, where in 3 weeks, when Europe and US put themselves at the discussion table, the accord was signed, where before it was taking, let's say, years to discuss to arrive nowhere, and here it was signed in 3 weeks. So things are happening. Of course, the price of the commodities are a big let's say a big motivation for those projects. But between Lebanon, Israel, Libya, and Egypt, it's really coming back as a, let's say, a dynamic corner. And of course, Africa is also benefiting from those, because when you need to replace about 10 million barrels per day, which were produced by Russia, you need to go for big project. And some big projects are, let's say, between this FEED and EPC period, where before the final investment decision was a little bit challenged. And now those FEED are taken finally, because the idea is to bring big volumes on the market. Now, in terms of opportunities, USA is also a big winner. As I say, they are the one who are going to, let's say, provide the gas to Europe for quite a long time. So, of course, they are going to benefit from that. And Europe is also, let's say, slightly benefiting from it, because it's a wake-up call a little bit for Europe about its energy industry. So it motivates a lot of investment on Europe in energy transition, in energy recycling, and many applications that we see around biofuel, etc. So it's a lot of investment coming up from Europe for Europe. So it's quite interesting, because if you are European players, you have an advantage clearly to play there. No, if we stop about the region, but we go by application, the main application would be offshore LNG, energy transition, and that's why we will go on them. Jean-Charles is going fast and moving to the forecast. Here we put you and graph you from Project Smart Explorer the capex to be invested year to year into oil and gas and petrochem. Petrochem appear in red, and oil and gas, really the upstream and midstream, appear in blue. And what you see that you see year 2022, which was already going up by a little bit, which was already the case. I mean, it's a slight increase that we were anticipating already from the graph you see on the bottom right, where we were seeing the oil and gas increasing already, increasing a little bit more actually than what happened. But of course, project has been postponed and everything. We'll explain you in a minute why. But you see the forecast for the coming year, 2023 is a high rank, is a high, let's say, block that you see on top of that. 2024 is already higher than 2022. 2025 is also higher, and 2026 is super high. That's not the vision we had before. You see on the graph on the bottom right, where it was scaling down quite quickly, where we see it being more steadily, just talking about oil and gas and petrochem, and it's quite an uncanny situation, but give us the confidence to tell you, okay, 2023 is going to be packed already. We know, and we have the vision on that, and it's not going to slow down on 2024, 2025, which means that here you will have a pipeline of projects which are going to be full for the minimum of 4 or 5 years. That's the forecast. Now, if we go to what has been awarded, if you check the pile and the years, the one where we put all our infographies is 2023. So if you look 2022, you see that it has been quite a huge year, more or less at the same level of 2021. Because when you have an award, of course, the money is spent on many years. So even if you have an increase, it's not, let's say, all impacting the selected year, but it's, let's say, buffered a little bit on 2-3 years span. So what is quite clear here that usually, as we were looking the following year, it was dropping. Really, it was a sharp decline every year. And here it's not a sharp decline at all, because you see that 2023 is already, let's say, 10%, 15% maybe lower than 2022. Which means that we are going to we start the year, 2023, with already a huge volume of business which has been awarded, okay, because we are only the 26th of January, and you see how high we are in level. So that's why we know, and we estimate, and we forecast that it's going to be a huge year, because just from what is not forecast, what has been already awarded, it's massive. It's a massive block. And of course, many projects will be awarded on top of that. So it means that 2023, we really see this step going up in terms of forecast. And that's the case for people which are working on long lead item, where they start to see a pile of quotation arriving, which is quite a good situation. So really, from the forecast and what has been already awarded, we see quite a huge year ahead. No, to give you some cinematics about that, we have mapped the map, sorry, of all the EPC contracts which have been awarded. So on the top left, you have what has been awarded in 2021. So 2021 was a good year and a recovery year from COVID. So it's quite a good, let's say, benchmark for the following year. And if you already compare 2021 to 2022, I know it's small, but if you look at US, for example, you see that density of point and award is way bigger in 2022. It's a little bit the same exercise for South America and Africa, where you see that there are more projects awarded in 2022 than 2021. No, if we go to the forecast, and that the map on the bottom, then you have 2023. And here you see that 2023 just covered with those green dots, and those green dots are project where you see all over Europe, all over North Africa, US is covered. So meaning that we have a forecast for 2023, which is just massive. Jean-Charles will go into the figures in a minute, but I mean, everything already from what we see, we know it's going to be a huge year, and of course, many projects will come on top of that, which is quite interesting, and mean that, okay, it's going to remain a challenging and pressed situation for quite a long time. Now I'm going to pass the ball to Jean-Charles, which is going to talk to you about the market shift and give you figures about total of projects being awarded.
Thank you very much, Jean, for this first part presentation, and that was, I think, painting pretty well the market trends we have observed all along the year. And the purpose now is to give you another perspective on what happened in 2022 and how we can make some conclusion or estimation or forecast regarding 2023 and following years in that dynamic. So. The first point is to address the market in terms of number of projects, in terms of capital expenditure, but also in respect to the profile of the operators. Many of you might be familiar now with this criteria where we split the market according to the profile of the operator. If it is an international oil company in blue, so those companies like BP, Shell, Exxon, Total, Chevron, and those 10 majors, I would say. In red, you have the national oil company like Saudi Aramco, Petrobras, Petronas, and many others, about 100 of them. And then in green, you have all others who are called independent. And all along the period, 2019 to 2021, we observe a small dip in 2020, especially due to the fact that international companies more or less start to pull the brake on the investment on their side. And then they continue to put the brake on 2021. But in opposite way, we observe that the national oil company in red and the independent companies in green were extremely dynamic and bullish to move forward and to go back in investment. And so you can see that on this period, the number of projects have increased by nearly 50% or 40%, and the volume of investment has increased by some 15%. So the volume of capex is smaller in terms of evolution than the number of projects in number, because again, the size of the project, which has been smaller due to the role of the independent companies, as you can see, between 2019 and 2021, which has become extremely important, even though those investments, those projects might be smaller than a large giant international company project. But at the end of the day, when you put all those things together, you get big numbers like this 359 billion of investment in 2021. Now, if we compare with 2022 on the left of this slide, you can see that the number of projects we continue to grow in billion as well. And again, we see in 2022 how much international companies have remained at a low profile, even though they try to go back at work, I would say, when the government, especially in Europe or in US, have been asking them to find gas anywhere in the world. Anyway, for instance, it doesn't translate so much in the figures in terms of investment. So most of the market remain dominated largely, at least in 2022, by national company and this independent. And then if we look, if we compare what did happen in 2022 with what has been awarded in 2022 for 2022 and 23, then you can see that the perspective in terms of actual project, not forecast, but still actual project, is really dynamic, because we can see that between what had been executed in 2022 and what should be what has been decided for execution in 2022 and 2023, sorry, an increase of 100 projects and an investment increasing by 60 billion. So what it shows here is that and the impact on that market is mainly due to the independent companies. As you can see, the green part getting extremely important now, exceeding half of the market. And that mainly due to the fact that a number of those independent companies, but not only, are making decisions in 2022 2022 for execution in 2023. And that's something we observe more and more, and that's something we have discussed already in the past, where more and more operators are converting, let's say, their FEED contract into EPC for execution in 6 months, 12 months, or 18 months from now. And so the comparison between those two diagrams are showing how much this phenomena is increasing, and how much the market is going to be increasing extremely high for 2022 and 2023. Now, if we look the forecast of that dynamic, we see that the figures are booming. For 2023, you can see that the forecast is nearly 900 projects for 1.2 trillion of capital expenditure. So it's really massive, with national oil companies back in business, with international oil company as well coming back in business. And so it shows the ambition of all those operators to move forward on projects they have been studying and designing in 2021-22, and that should come in execution in 2023. Of course, when you compare those figures with previous years, everyone can understand that this forecast has little chance to happen. I mean, there is no way for engineering companies and manufacturers to be able to absorb such increase in such a short notice in 2023. But at least that reflects the ambition, and that confirms what Jean was explaining earlier with the bar graph he was showing you, that what we can anticipate that 30%, maybe more, or 40% of the forecast of 2023 should be postponed and delayed on following years. And considering the amount of this project to be postponed, the decade until 2028, 2030 even, should be extremely strong. And we can see that already for that period 2023-2027, we have 2.4 trillion of capital expenditure which are already identified across 1,363 projects. So that shows you how much this market for oil and gas and petrochemical is extremely dynamic, and should support your activity in this market for at least this decade, and most likely the next decade as well, because as Jean explained it very well, is not tomorrow that the world will be able to stop using oil and gas or fossil fuel industry and carbon molecule, because we just need it for our daily life. It doesn't mean that we should do nothing for the environment. Of course, we need to decarbonate our environment, but at least the basic needs are still there and should continue to grow. So the consequence to manage this money, all those projects, is this new business model. That's something we observed already in the previous years. Last year, we told you that it was about 40%. In 2022, we can see that it came up from 40% to 45%. So this trend is continuing to grow, where in fact again the end users are converting the FEED contract they had awarded with a contractor into EPC, so that the EPC contract is awarded without any tender. And that's very important to understand that business model, because it has a big impact for you in terms of supplier. The first target for those operators is to secure engineering capacity, because they make a deal with the contractor during the FEED, and at the end, as they said, okay, in 6 months, 12 or 18 months, we shall convert and move forward for the execution. So the capacity for engineering is secured. It's also a way to cut the cost, because you understand that with the demand for so many projects, the material costs are not going to go down in the coming years. So inflation on the material costs will still be there and will affect number of projects. So redesigning the project from scratch, thinking out of the box, may be a way to compensate or absorb a material cost in redesigning the project in a smarter way. Typically, it's a business driven by Western contractors, from Europe or US who are very much interested to show their competence, their expertise in helping end users to cut the cost this way in redesigning the whole processes in order to be competitive at the end and to help operators to execute their project in a good condition. The consequence, you know it, for OEM, you need, of course, to adjust your pricing model to this new business model, and that's something we already discussed in the past. Here you have the comparison between the conventional business model for the one who may have missed previous webinar about this topic. So where on both cases, new business model or traditional business model, you have the pre-feed and feed. The only difference is that at the end of the feed, in the commercial business model, there is a tender for the EPC contract which is organized, and then if one contractor is submitting an acceptable price for that project, then the end user is awarding the EPC contract to the lowest price bidder. That's the way to work in the conventional business model. When you go to the new business model, it works the other way around, where at the end of the feed, the contractor and the operator agree on the price and delivery time, providing a decision to be made, as I said, in the next 6 months or 12 months or 18 months, so that there is no tender anymore at that stage. And then as soon as the end user is making the final investment decision, the contractor is proceeding for execution immediately, which means for the supplier to be already selected during the feed phase. So the other point here is what we call the bullwhip effect. Many of you may have heard about it as well, but we see this point being extremely important, especially because a number of projects, especially in petrochemical side or LNG business, for example, are coming back to the drawing board, meaning that the feed is reworked because those projects were not considering the carbon emission when they were designed first. But today, the operators know that there is no way for them to move forward in a project or multi-billion project without working on the carbon emission of that project, so that it makes it easier to get the air permit and at least to comply with new regulation in terms of carbon emission. So that means that this bullwhip effect, it means that when there is a change here in the design and requirements of the project at the end user stage, so on the very early stage, then it has many impact on the contractor doing the feed, then even more impact on the contractor doing the EPC, and even more impact on the suppliers at the end of the supply chain, because it can even exit previous suppliers because their technology is no longer acceptable. And in opposite way, it can be an opportunity to bring in new suppliers precisely because they come with new technologies, new solutions that were not considered primarily at the origin of the design of the project, but because of the new context and the new expectation regarding the carbon footprint, for example, then the vendor list specification are completely reworked and opening space for new players. So this bullwhip effect is very, very important today. And with all those projects that were ready to go, which has been postponed for redesign because of the carbon footprint, it opened quantities of opportunities for suppliers and contractors to integrate those new solutions in their design. And that's why, on that respect, the new business model is extremely important, because the more you anticipate your frame agreement with the contractor or the end user at the early stage of the design, the more you secure your business for the end when the project will move into execution. So that's why already in the past, we would consider feed as king of the decision process to secure your business for price reason, for margin reason, for specification to benefit from the first call and so on. But now with this bullwhip effect, it is even more important and crucial to be involved at the earlier stage here of the bullwhip effect, so that when you supply at the end of the supply chain here, you know what's going on to happen and you can anticipate it, and then you can remain competitive with your offer and not suffering from the change of decision, but contributing to those change, anticipating them, and preserving your margins on your business. So let's focus on some key application. So petrochem, what we call petrochem is covering refining, ethylene crackers, aromatics, and all the specialties behind it. So you have the forecast over here showing you 2020, 21, 22, and the forecast for 2023. So you can see that the demand for refined product and crackers is increasing over the years and to come up. And you can see that already awarded for 2022, it was same level of 2021. Considering the impact of the decarbonation, which has contributed to delay a number of projects, and that's the reason why you can see that the volume of business awarded for 2023 is already that high. You can, of course, imagine that the business awarded for 2023 has not been awarded between 1st of January and today, but it comes from project which has been awarded in 2022 for execution in 2023. And that, of course, give credit to the forecast we have here for 2023, that in this segment, this 2023 year should be pretty good, and showing a significant increase compared to last year, because again, a number of projects has gone through the decarbonation redesign and should move into execution now because the demand is there. You can see this market is dominated by national oil companies. It can be in Middle East, it can be in Africa, it can be in Asia, but also independent companies where we have quantities of players. I think about INEOS, for example, but many others who are also active in this area. Regarding LNG, we talked about it already, but we can see directly the impact of the market, and then you can see how it looks like for 2021, 22, 23, and following years. So we have a peak of business pretty high at that level, and we can see that the actual numbers are already increasing as well and showing an increase on 2022-23. Just to give you an idea, since 2020, meaning since 2020, 21, 22, the number of LNG carriers which has been ordered to shipyards on that period has doubled every year, meaning that the number of shipyards of LNG carriers has doubled between 2021 and 2022, and it has also doubled again in 2022 over 2021, so that last year about 150 LNG carriers has been ordered, and for 2022 we anticipate to stay about the same number, 150 or 200, so that all shipyards in Asia are fully booked by those LNG carriers, just reflecting the investment and the demand on this side. But here you see what is interesting, the balance between international companies and US independent to lead the game here on those investments. The other point also we can notice for this LNG project that they will run on electrical solution. Okay, there is nearly no project moving just with gas turbine as usual, because the CO2 emissions are not acceptable anymore for those projects, which increase the cost of the project, of course, but increase as well as the value of your equipment and for your solution. Regarding offshore, it's also a positive trend. You see how much is going up to the roof here. It can be offshore platform, it can be FPSOs and so on. So the market is really booming, and you can see how it goes up as well here. And for 2022, and the forecast, what we can see as already awarded for 2023 is already significant. So here again, in this business, you can see that how much this market is dynamic, and the number of FPSO to be awarded in 2023 should exceed largely the one awarded in 2022, which was already showing a good increase compared to last year. And then you have the split of the market by operators, where it shows that the market is dominated by a national oil company. Regarding the floating equipment, so it can be FPSO, FPO, or floating LNG, we just see the confirmation of what we had seen earlier, where you can see the demand is really booming over here, and it should continue for the next decade, because again, the shipyard are not able to absorb all those LNG carriers I was mentioning earlier, and even less of those FPSOs to come along on the coming years. So you see where we are already for a project awarded this year and last year, and then it should continue to increase with the limitation of the capacity of the contractors to absorb all this work. So that's why a number of projects will be again delayed, but that means that the market will be solid over the next 3 years and until at least the end of the decade. And at the initiative here, rather well balanced between international company and national company. So as a conclusion, the Ukraine war is of course bad news for all societies, and of course for Ukrainians themselves, that's for sure. But from energy point of view, it's the tension on the energy market, anyway, I mean, to be very fair, is not due to the Ukraine war. I mean, this tension on the energy market were already there before the war, but it's clear that the war has escalated even more those tension because of the reshuffle required geographically between the region consuming energy and the region producing this energy. So that has a big impact and require huge investment to manage this relocation. And that applies to all kind of businesses. It can be upstream, midstream, and downstream. And it should continue in 2023 until at least 2027, as far as we have a visibility. But we can anticipate that it should continue until 2030 at least, because again, the demand for oil and gas will be robust until then. LNG and offshore projects are really leading the game. So if you are in this business, it should be very good for you. If you are not, it may be wise to have a look into it. Regarding the key players, clearly national companies and independent companies dominate the market, as they play for 85% of the capital expenditure. Anyway, the good news for international oil companies is that the Ukraine war has motivated all governments to go back to those big players like Shell, BP, Exxon, or Total, and to price them to say, okay, can you find me gas anywhere you find? And that gives a role to those IOCs, which were really in deep trouble until this Ukraine war. So at least there is a good news for those companies, and you can see the result of those companies being published those days, confirming how much for them this situation is beneficial. So as well, everyone, I think, start to realize that the question is not about oil and gas and petrochemical, if we should continue or not to produce it. There is no alternative so far. The demand for it is still there, and it will continue to increase It can be maybe not so much in developed countries, but in emerging countries, that's for sure, and Africa, for example. But the question is how to decarbonate it, and that's another challenge, but requiring technology, requiring engineers, investment, and equipment. So it's a good news, and at least all the smartest companies, innovative companies, will take advantage of that situation, which makes sense. This innovation, again, supposed to be introduced at the design phase, and that's where this new business model is opening the door for all those innovative companies to play at feed stage. That's why we say feed is king at this moment for quantities of reason we explained earlier, and even more than before. I mean, we mentioned that already years ago, but the role of the feed is increasing and will continue to increase. So if you just wait for receiving inquiries when the project is moving into execution, you will just disappear from the market. Because in this business, you will have to deal with contractors coming from Asia, meaning Korean or Chinese, with extremely competitive prices, and that would be very, very, very difficult if you were not positioned at that feed phase. It can be for absorbing the demand, for adapting the design of the project to the capital expenditure available. And it can be also for the supplier to absorb and play with this bullwhip effect in order to manage their supply chain in a good way and produce equipment and execute project with acceptable margins, as of course any company should do it.